Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, December the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we've talked about in these webinars and daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data that came out today, I don't know that it really put a damper on the market, and it's not hugely looked at, but it is important nonetheless in my eyes. And it was the Dallas Fed Manufacturing Index. Came in at negative 20.1 versus last month negative 4.9, and it was expected a negative 7. Now, this is really big because it is the lowest reading since June of 2009. The Fed president down there basically said it's starting to get really ugly. And if you look at the bits and pieces of this, the details of this index, if you looked at new orders, it was down 8.9 versus negative 1.6. Also, the growth rate is negative 14.3 versus negative 7.3, and it's just really not looking that good. And I've been talking about these overall economic data points are not looking good, and the Fed had just raised rates going into all of this and fully knowing that all of this was not looking good. So it's a little bit bizarre. Anyway, that hasn't really put the damper on the market. The overall market was slumping well before that. As you can see here, the E-mini NASDAQ chart, it's down about 25 points or so, or about 24 and a half, 25 points. So right in this value area high, or that's going to be a resistance area. So if it gets below that, it could want to go down to this 200 200 moving average, and which just coincidentally coincides with the point of control or the value area. All right, and on to the E-mini S&Ps. As you can see, this is a 15-minute chart of the E-mini S&Ps, and bumping up against the value area high several times and failing on that. So not looking too good. They're down 11 points. I think the Dow's down over 100 points right now too. So overall markets are slumping. A couple of things that one thing that I took off was this Apache. I tried to take it off last week and was kind of chasing it as it was selling off. I tried it early in the morning. I was at 50% of my max profit and didn't give up enough of an edge. The markets in there were pretty wide, but ended up just throwing in the towel on it today. Not quite 50% of my max profit, but got out of it nonetheless. And then Apache, I had on the January 52.5, 57.5 call spread, and combined that with the 45.40 put spread to create that iron condor. I had originally sold it for $2.13 and was trying to cover it for about $1.10 on last week on Wednesday or Thursday, Thursday, and got out of it today for $1.48. So not super excited about that one, but it was a profit nonetheless. So and the other reason why I went at it is because those 45 puts were being tested for the most part, and with only 18 days to go, I didn't want to really risk having it go any lower. So the chart doesn't look too good on that one. Couple of trades I put back on. It looks like I basically just took these trades off, it seems like, and got back into them. Caterpillar just can't get out of its own way on this, and was looking like it was wanting to sell off again. So I decided to get back in here and had put on the January 70.71 call spread, sold it for 30 cents. So right around the third the width of that strike, which is $1 wide. So that's what I'm looking for in there. 18 days to go. I hope to only have this on for a few days, and hopefully we'll come back down here and test this area. All right, moving on to XOM. This is another one, ExxonMobil. I just took off, and just a few days ago, I think it was Monday of last week or something, and decided to get back into it again. After this Fed manufacturing number, I looked to get back into the oil and gas. If Texas is not doing too good, then oil and gas probably isn't looking too promising. So in XOM, I did the January 82 call spread and sold it for 57 cents. And not quite the third the width of those strikes. It should be around 66 cents, but with only a few days left in this trade, those premiums are getting a little tight. So that's why I put that trade on, looking for it to sell off again. So, and in Twitter, because I've added so many short deltas to my portfolio, I needed to add a little bit of long deltas in there also. So in Twitter, I went on the contrarian side. It's just been beaten up so much, and I saw they actually have quite a bit of money. It's just a matter of finding some guidance in that company. So I looked at trying to pick a bottom here. It's found support down here and kind of come off of it a little bit. So I just needed to add some long deltas, and this one looked like it would fit the bill the best. And in Twitter, I did the January 21 puts, sold those for 26 cents and collected that credit. All right. Looks like, again, because we have the holiday coming up again for New Year's, this week we're going to do our webinar on Wednesday. And Wednesday I'm going to be looking at doing long call spreads. We've done several on the collars and different variations of that. This is actually another way to supplement a collar strategy, being long a call spread. So I'll go into the nooks of that on Wednesday, talk about how that is very comparable to a collar if you use a collar a lot, or if you've been implementing collars. This is another strategy that is similar to that. All right, that's about all I got for you guys today. I hope everybody had a happy holiday. It's pretty quiet today because it's Boxing Day in Canada and overseas, so that's a bank holiday, so those guys are closed right now. So not a whole lot going on there. All right, if you can't take that, take it easy.